Next question. Had a great couple of days here trading US CAD and pound. Great job. After journaling and deciding to enter the market, I've watched the MACD numbers on the 1 minute window to signal when buying or selling is stalling out and I should get out or re-enter. Ooh. Oh, 1 minute. I just kind of go into convulsions when I hear that. Of course, I'm not reaching maximum profits. Yeah, you're not going to reach maximum profits looking at a 1 minute chart, and I don't expect to. Which, hey, if you don't expect to reach maximum profits, if you're happy trading that way, then by all means do it. But it has shown me when the market is starting to turn. You suggest going only to the 15-minute window, but don't you think this is a logical strategy? Yeah, I do. Also logical strategy meaning the 1 minute. No, I don't. Also during the hectic trading of the US CAD, I noticed the spread has increased. Yes. Does this usually happen? Yes, of course it does, because your broker wants to make more money from you. Interesting that if the U.S. Canadian dollar, if the volume picks up, shouldn't the spread go down? Interesting. So if it's not going down, why is that? Well, it means that the U.S. CAD is actually going down on less liquidity, less volume. Academics have basically proven that when volume increases, the spread tightens. Which is basically common sense, but the academics like to, make sure of things. And believe me, that's not a disparaging remark. I actually appreciate and celebrate their research because it actually proves it. It's a scientific process. Prove it out. Okay, you have a gut. Your gut says that when volume goes up, the spread should tighten. But let's go see if that's actually the way the market works. So if the CAD is the Canadian, what I'm saying here is the U.S. If the US dollar Canadian is going down and the spread is wide, that means low volume. Okay? Just an interesting tidbit there for you. Get back to this. Do I risk when trading on those days using the insider code if I don't have this new information? It really does look like some of these questions are getting cut off. That might follow up the... Yeah, I apologize. I'm going to have to edit some of these questions here. Okay, not sure what happened there. I'll have to talk to Amelia about that. I understand the concept of momentum and wanting lots of momentum, quote, lots of momentum when trading with the trend. For counter-trend trades, you say that no or low momentum is the key. Wouldn't you also want momentum trading counter-trend? Not really, because let's think about momentum in a scientific sort of physics way. Momentum carries with it a definition that momentum has got to continue. Otherwise, what you're doing is accelerating in the opposite direction. Okay, so if you have this little hill and you have a ball and you roll this ball up the hill and it smacks and it goes up here and it starts to slow down and then it starts to turn back around, as the slowing process starts, you have acceleration going in this direction. Okay, it's accelerating, it's speeding up. As soon as it starts slowing down, it's accelerating in the opposite direction. Okay, it's just a basic principle of physics. So momentum would carry with it some connotations that the momentum is continuing. So you have momentum here. This is not momentum here or here or here. Why? Because the market does not continue. There's no momentum here, here, or here. Why? Because the market does not continue. That, I guess a better way of saying it would be follow through. You want the market to have no follow-through. That's a better way of saying it instead of momentum. Because you may see that short-term momentum is there, and this can get kind of confusing because you can say, well, look, Mac, that's a big bar. That shows momentum. Yeah, so let's talk about it in terms of follow-through.